The Federal Reserve has quietly initiated a policy shift that 99% of investors are completely missing. While Bitcoin has already reached new all-time highs, the reality is that this bull run is just getting started. Altcoins remain significantly undervalued, and the macroeconomic data suggests this cycle could extend far longer than most anticipate. If you believe this is just another temporary pump before a devastating crash, you're overlooking the most important factor. This time is fundamentally different. The Fed's stealth money printer is back. A liquidity tsunami is coming. The 2022 bear market was defined by aggressive quantitative tightening, QT, where the Federal Reserve withdrew $95 billion per month from the economy while simultaneously hiking interest rates from 0% to 5.5%. This combination crushed asset prices, particularly in crypto, where Bitcoin and altcoins suffered catastrophic declines. But the landscape has completely shifted. The Fed is now laying the groundwork for a new phase of monetary easing. In May 2024, they discreetly purchased $43.6 billion in U.S. Treasuries, including an $8.8 billion single-day acquisition of long-term bonds, an extremely unusual move that signals a softening stance. More importantly, Jerome Powell has all but confirmed that interest rate cuts are coming in late 2024 or early 2025. When this happens, cheap capital will flood back into risk assets, with crypto standing to benefit more than almost any other market. Historically, every time the Fed transitions from tightening to easing, Bitcoin enters a parabolic phase. In 2012-2013, Fed easing preceded a 100x Bitcoin rally. In 2016-2017, it led to a 50x surge. And in 2020-2021, unprecedented money printing drove Bitcoin up 10x alongside an altcoin frenzy. The same conditions are forming now, but with one key difference: institutional adoption is magnitudes higher. This isn't speculation. It's a repeatable pattern, and the Fed's coming policy shift could propel Bitcoin beyond $250,000 while sending altcoins to previously unimaginable valuations. The crypto risk model is screaming, "Buy the dip." Why this cycle has years left. Most investors panic when Bitcoin corrects 20–30%, assuming the top is in. But the data overwhelmingly contradicts this fear. Our proprietary crypto risk model, which accurately predicted both the 2021 peak and the 2022 bottom, is currently flashing strong buy signals across the board. Bitcoin's risk score sits at just 52 out of 100, far below the 70–90 range seen at past cycle tops. Even more telling is the total crypto market risk score, which is at 30, less than half of what it was during the 2021 mania. Retail participation remains shockingly low, with Google searches for terms like Bitcoin and altcoins still well below 2021 levels. This data paints a clear picture. We are not in a bubble. In fact, we may still be in the early stages of this bull run. Previous cycles saw Bitcoin's risk score climb much higher before peaking, and altcoins didn't truly explode until the final euphoric phase, which hasn't even begun yet. The smart money isn't selling here, it's accumulating, because the metrics confirm that the biggest gains are still ahead. The coming altcoin explosion: why you must position now. Bitcoin's dominance has been the story of 2024, but the real wealth creation will happen in altcoins, and that phase is just around the corner. Institutional interest is shifting beyond Bitcoin, with BlackRock's Ethereum ETF approval marking the beginning of a new wave of altcoin investment vehicles. Solana, XRP, And even meme coins could soon see their own ETFs, unlocking billions in institutional capital. Retail investors, who drove the 2021 altcoin frenzy, are still largely absent. When they finally flood back in, the moves will be explosive. History shows that altcoins don't peak until after Bitcoin's dominance fades. In 2017, Bitcoin topped in December while altcoins surged in January 2018. In 2021, Bitcoin peaked in April before altcoins went parabolic in May. If Bitcoin reaches its high late this year, altcoins could detonate in 2025, with many projects delivering 10x to 100x returns. The time to build positions is now, before the crowd realizes what's happening. Layer 1 blockchains like Solana and Avalanche, AI and DePIN projects like Render and Akash, and even select meme coins are poised for historic runs. Missing this phase means missing the biggest gains of the entire cycle. What you must do now, the smart money playbook. First, continue accumulating Bitcoin and Ethereum. These remain the safest and most liquid crypto assets, with Bitcoin likely to reach $150,000 to $250,000 and Ethereum potentially surging to $15,000 to $20,000. Second, strategically allocate capital to high-potential altcoins. Focus on sectors with strong narratives, Layer 1s, AI-driven protocols, and decentralized infrastructure projects. Meme coins, while risky, should not be ignored entirely. They often deliver the most extreme gains during peak euphoria. Finally, have a clear exit plan. Use tools like risk models to identify when markets are overheating. The dumb money holds too long. The smart money takes profits when the data says the cycle is peaking. The Federal Reserve's policy shift is setting the stage for the most explosive phase of this bull run. Bitcoin's next leg up could dwarf previous cycles, and altcoins are just beginning to awaken. If you're not positioning yourself now, you risk missing a generational wealth-building opportunity. The data is clear, the trends are undeniable, and the time to act is today.